Thank you so much for joining us for 10 out of 10. I'm Mark Schumacher. This is the podcast where we aspire to bring you at least 10 takeaways in 10 minutes with an expert in the field surrounding our home furnishings industry. And I am happy today to have a guest who I'm very familiar with, who is going to bring a lot to the table. It's Peter Keith. He's a senior research analyst for Piper Sandler, which you may know is an investment bank. And he focuses on hardlines and broadlines in the retail space. And gosh, always has plenty to talk about. Peter, thank you so much for joining us. I really appreciate this. And I'm going to start the clock, Peter. Our 10 minutes starts now. I want to just
All
ask you
right.
first of all, there's been a lot in different publications in the last month or so showing some upticks in betting. And you've done so much research on the betting side. I'd like to start there. What are you seeing from your research? Because these sound like they may be some significant trends starting.
Sure. Yeah. So, Mark, as you know, and for listeners here, for the last 9 or so years, I've run a monthly survey with a number of industry retailers, and we just get their year-on-year sales results for the month, and we do a simple aggregation down to mean and median figures. And this establishes a bit of a benchmark on how the industry is doing. So to your point, the industry appears to have gotten better the last 2 months. We saw in our survey where we have April and May, our June survey will go out this week, but April and May were both up about mid-single digit. So call it in that kind of 4 to 5% range. And frankly, those are basically the two best months in the last 3 years. So 1 month does not make a trend. 2 months starts to make a bit of a trend. And so it's starting to look a little more optimistic. And that was also capped off, but seems like a pretty healthy Memorial Day weekend in late May.
So do you think this is sustainable? I'm kind of hearing that from you rather than this just being sort of an ebb and flow. It sounds to me like you're feeling there are signs here that this could be a sustained increase.
I think so. Yeah. Um, get asked by a lot of investors why industry or why mattress sales are getting better. I mean, it's not like the consumer is booming. There's a lot of negative data points out there on the consumer right now. My answer is relatively simple, and I just call it, well, the rule of three. And we've been down 3 years in a row with mattresses. Mattresses, as many industry participants know, were rolled very, very quickly in late February and early March of 2022. So pretty strong in the first 2 months of the year. We start lapping stimulus in 2022 because there's a lot of stimulus checks sent out the 2 prior years. And Ukraine was invaded in late February of 2022. So gas prices and really inflation started to take off in March and April. So mattress sales rolled immediately. So that's been a very tough 3 years, as everyone knows. And so when you just think about the timing here, where April and May, despite a kind of sluggish industry backdrop for the consumer, has gotten better, really feels like maybe the industry has bottomed out here. And I think that's encouraging. So looking forward, I think housing is no longer, it's not great, but it's not a negative. Housing turnover is relatively flat year on year on a very low base. And then what I think you saw with Memorial Day weekend is a pickup of advertising. The retailers are starting to see when they spend a little bit of money on advertising, they get a benefit. And so you're seeing more and more companies jump into the advertising pool, and that's just going to increase the share of voice for the industry. And we all know that that helps to drive demand.
It's interesting. There's something that you and I talked about prior to meeting today, and that is that it's been impossible for businesses, particularly in our categories, to plan because ever since 2020, every year has had its own oddities and disruptions, right? So there's really not been that 3 year run that you can look back and really do a lot of really terrific planning. But there's something that you have discovered that I really want you to dig into here. You're saying that right now, total units, we're talking bedding, correct? As compared to 2019, that they're close. So talk a little bit about that, because I'm really intrigued by what that tells us about the health of that sector right now.
Yeah, it's a great topic because really to understand, have we fully digested some elevated COVID demand is to look at mattresses or any industry, where are you versus 2019 levels? And we've heard some different speculation in recent months that some people think we're way below 2019. We've heard other people think we're still above 2019 units. So we really dug into this combination of some ISPA data as well as mattress import data. And then we also wanted to account for this sort of very subtle but growing base of suppliers. They're usually Chinese-owned manufacturers that have just opened up factories directly in the U.S. So like a Zinus or an M. Lilly are the ones that come to mind. We don't think they're showing up in any of the reporting with ISPA or imports. So when we account for those three buckets, ISPA, imports, and then this growing base of suppliers, we came up with about 27 million units. And that's about, we think about 10% below 2019 levels. So no doubt Amazon has taken a lot of share and there's a lot of low-end units, but when we put everything together, we're still way below 2019. And that speaks to, again, this bottoming process that we think the industry has hit and is now starting to see a little bit of growth.
Before we jump out of bedding for a second, I want to just also ask you, has there been any impact, negative or positive, with a lot of the movement relating to companies within the bedding space? You know, there was the Tempur Sealy purchase of Mattress Firm that was very contentious for a while. Certainly took a lot of attention, a lot of question about how that's going to shake out. And then you look at large retailers like Mattress Warehouse that have a very aggressive growth strategy right now. Are those things playing into any of this? Are they an indicator of this upswing, or are these things all sort of separate?
I still think that they're separate. It's still a little bit early on that front. So my opinion could change. But I would say most retailers that we speak to are not overly concerned around the acquisition of Mattress Firm or the Mattress Warehouse dynamic that you mentioned of buying a bunch of former Tempur-Pedic or stores from Somni Group, we'll say. I think what most the feedback is, like, they feel Mattress Firm historically has been a bit of a bad actor, sometimes gets a little erratic with promotions. And now with Steve Rusing at the helm as CEO at Mattress Firm, that maybe Mattress Firm will be just a more rational competitor. And I think everyone feels like, they're fine competing against a rational Mattress Firm. So it's still early days. I don't think that's contributed to the industry uptick here we've seen. I think it's purely coincidental.
Okay, just wanted to ask that. Now, you also handle, Hardlines, et cetera, and delve into a little bit of everything in our industry. So let's talk about then, is this bedding uptick, is that a bellwether for what we can expect for the rest of our industry, or are they still two things that don't quite connect, or do they?
Look, mattresses for me, for what I do, I think a great economic indicator. I call it the tip of the spear. Mattresses at the end of the day are one of the most deferrable purchases out there. It's big ticket. The mattress does not break, so it's not like you need to rush out and buy a new one. And also, the mattress doesn't embarrass you because it's usually sitting in your bedroom covered by a sheet. and combine that when there's usually like a 2 to 3 week consideration cycle of people doing research. So if there's some type of global event, gas prices go up, maybe there's a conflict somewhere in the world, it's very easy for people to pull back and not make that purchase. So that's where you tend to see mattress sales slow first. But the reverse can happen on the upturn. And so that's where I think mattresses are starting to make a move here. We think the same thing is starting to happen with furniture. And now there'll be other bigger ticket items like TVs, like appliances, like remodeling. They'll take a couple of months, but those will, I think, will also start to get better. They, of course, slowed later in 2022 than mattresses.
But to your point, we're also looking at the fact that type of a purchase during a time of difficult consumer confidence, that's pluses that are going against a headwind. So I like that. That's really something I think we can kind of hang our hat on. We got time for one more question. You had talked about briefly about home building, et cetera. That's been flat, if not down. So are you also saying, boy, we're in a position now of trending up? And if home building ticks up, do you see that being fuel for this fire at this point? How do those things, do you think, relate today, right now?
Yeah, the bottom line is that housing is neutral, and I see if anything, it's going to become a nice tailwind over the next 6 to 12 months. So we looked at, we get this question a lot too from investors, and how much of an influence does housing have on mattress sales? And we landed at roughly about 20 to 25% of the mattress industry is driven by housing. We got that number by taking the total number of existing homes that are sold every year and added that to the number of new homes that are sold. And when we take that combined total, that equates to about 20 to 25% of total mattress units sold. It's actually about 20%, and we assume people maybe buy like 1.25 mattresses or something like that. So it has an impact, but you still have about 75 to 80% of the industry that's discretionary replacement. Now, the reason why I think housing could be a nice tailwind in the next 6 to 12 months is that this whole tariff situation is largely settling down. Middle East conflict looks like we're getting through that okay. And so the market is now starting to price in 2.5 Fed rate cuts this year. There's, I believe, a 60% chance for a Fed rate cut in September, and then another one in late in the year, and then a potential third one in January. That's where we kind of landed 2.5. So we start to get at some Fed rate cut activity, and we get mortgage rates down closer to 6%. We think that's going to spur a lot of demand. At the same time, another great dynamic to consider, housing supply has been moving up quite a bit. So it's becoming more and more of a buyer's market. You combine that with the potential for some lower rates, and it could be a really good setup for housing-related purchases.
Well, Peter, that's our 10 minutes. And I think that there's enough optimism through this to give people something to think about. Nothing you can truly hang your hat on, but boy, at least some indicators looking good. Peter Keith, of course, the senior research analyst for Piper Sandler. Appreciate you joining us. And we thank you for joining us here on 10 out of 10. I'm Mark Schumacher, and we will see you next time.